Good evening, everyone. My name is Paul Young. I'm going to walk you through corporate reporting. So this presentation is designed people that are in a pre-sale sales role or business partner that are trying to get more grasp about what's going on with customers in terms of the reporting cycle. I've targeted 4 specific areas: sustainability reporting, I've targeted integrated reporting framework, I've targeted additional SEC filings related to sustainable reporting and governance, as well as the soft close reporting. The purpose of this is most people in a pre-sales and sales role, when they're selling in the office to find out, are not typically accountants. So some of the jargon that they see aren't typically things they're able to speak to. So I'm going to try to keep it simple to the basic understanding so that people can keep, when they're positioning themselves as part of the sales cycles, including the solutions, they have an opportunity to move forward with their pre-sales and sales conversations. Now, the agenda I'm going to talk about complexity of reporting. I'm going to talk about the types of reports, and then I'm going to basically talk about solutions. Now, we all know in the pre-sales cycle, sales cycle, as well as with business partners, big data is here to stay. It's now all about how we manage that big data. So basically, customers are requiring more and more data, what we call as real time. They're not waiting just at the end of the month for the GL to be closed, because that's too late to make business decisions. So they're looking at better ways to take that data, to put it out to end users or push it out through mobile devices, whether that's iPads, whether that's the iPhones, or different tools to get that information out so that sales cycles, operations can basically better manage the trends to make it be adaptable to what's going on in the marketplace, as ways better managing the overall flow of the company. That's what I really wanted to talk about. The other thing that's becoming very, very complex for the last 20 years is the navigating regulatory filing areas. Every time you start to look at a 10K or 10Q reporting, whether you're getting into the US for SEC filings or any sort of European mandate, it's becoming more and more complex. The more and more complex means it's more and more chances you're going to have errors or concerns about data being integrity issues. So I'll talk a bit about that. I also brought in risk management area as well, because that's an area where you see a more integrated approach with risk management as part of the overall reporting cycle. And I'll get into that specific area as well. So what is sustainability reporting? But this is really coming into the mandate of our carbon footprint and understanding the environmental impact our company has as part of its operation. That's in a nutshell what it is. Now, who's reporting it? Since 2013, 95% of the 250 Fortune 500, 250 Fortune companies are reporting sustainability report as some shape or form. In Europe, basically there's a mandate since 2014, and IBM Cognos has a value proposition. That's why I've listed it there, and that's something that's just to bear in mind, that we do have options there, that we've already looked at that mandate. So and on the sustainability reporting, it's just to make sure that you understand that there's a set of rules and guidelines to get consistency in the reporting. Integrated reporting framework now is taking all the different pieces from sustainability reporting to the actual accounting standards to integrate them, and so you know the risk factors inside the financial statements of that company to get the clear picture of where the impact is. So the idea with integrated reporting is to make sure we're pulling everything together so the investors or the readers of the financial statements understands what's impacting this company. Okay. The mandate itself is not mandatory, with the exception of South Africa. Now, many countries are evaluating the integrated framework, so it's a moving target as we speak. Just like IFRS and accounting standards, you're probably going to see more and more people move to an integrated reporting framework to get global consistency. That's an area, reason why I want to talk with pre-sales, sales and business partners. It's an area we need to watch, and we need to move our solutions forward to adapt to these changing demands of businesses to pull data together. What is its purpose? As I said before, it's to integrate all aspects of data together so that a reader of the financial statement can connect all the dots together in terms of the results. Now, what does it include? Well, this is a snapshot of what it includes. It includes overview of the external environment, governance, the accountability, business model, so how you're operating, risk and opportunity, so what are the risk threats to an organization, where are the opportunities to mitigate that risk, strategic and resource allocation, so how are they reallocating resources to address their business model, their plans, the overall performance from the results out to the operational results, outlook, where they're going to go to the next quarter. So basically, it's giving you a complete snapshot of what's going in that company, both the current state as well as the future state of that organization. So how many companies are following an integrated framework? It may not look like a big area. We're only seeing 150 companies in 25 countries, but it's an area that's being monitored around the globe by the different filings within countries. So it's an area that we need to be cognizant of as we move forward with our solutions, because it's an area that's going to grow. Now, that covers integrated reporting framework. The next thing I want to focus on is mandates now within SEC filings for governance and social responsibility. So as part of the 10K filings and the specific 20F filings, there's a mandate to report governance, social, environmental, as sustainable topics, so the investors know if there's any material issues that could impact the results based on the approach of that company in terms of its managing its environmental risk, social issues in terms of things. Because remember, social acceptance can also drive revenue for those companies. If people don't believe that company is socially responsible, they may not want to buy that product. If they have environmental issues, that can impact the cleanup, that could impact the results. So this is kind of give you an idea of the impact study. Now, I wanted to show you this one, the sectors in terms of the SEC. In 2013-2014, there's about 10 sectors that were involved under this sustainability objective in terms of disclosure for SEC. They were like healthcare, financial, technology, non-renewable resources, transportation, and services. So it basically covered about 45 different industries. 2015-2016, they're going to add 2 more sectors. So in essence, they're going to add about 35 more industries. So it's a growing area in terms of building the reports that you need to be cognizant as you look again at that mandate, because it's something that's going to drive things. How does it relate to the overall MD&A? Now, I pulled this from CPA Canada, but it's going to relate to across any sort of regulatory filing. It's going to overlay into the notes as part of the disclosure area. So it's part of that commentary that we would build as part of the exhibits. Now, that covers basically the soft close reporting. Not soft, the 2 major ones. The next one I wanted to focus on is the soft close reporting. And as a pre-sales in a sales cycle and a business partner, you're going to hear this term soft close reporting. What that is, in between when they have to file regulatory filings, they close the general ledger and they prepare a management report, what they typically call a soft close report. It typically has specific information in it. It usually has an income statement, usually has a balance sheet, it usually has some key metrics, both external and internal. It also has some commentary that's usually prepared by like a financial analyst to kind of tell what's going on with the business unit. There's also other metrics as well from the HR side, as well as health and safety, that can all be pulled together. The reason why I want to highlight that on the sales cycle and the pre-sales and business partners is you're going to hear this term. So it's all kind of understanding what the management's trying to do with their data and how to pull it together in terms of the processing side, in terms of the tools, how we pull that data together in terms of the solutions. That's really what I want to talk about, because every organization is a little different on how it structures in terms of its roll-up, but it's pretty consistent in terms of a soft close report, what they generate from their accounting systems in terms of financial statements, as well as using a reporting tool from Excel, or even as I get into the solutions from Cognos Disclosure Management, as part of pulling that information to present to management. Now, what's going to drive demands for business? And I talked about this early on, part of understanding thing. We're in an era now where we're not going to see huge economic growth in the G7, G8 countries because of the demographic shift that's happening there. So we're likely to see 2.5 to 3% growth, economic growth in the next probably 15, 20 years. That being said, companies need to still be adaptable, so it's becoming more and more critical to manage that data in real time. So we're going to have to look at, as a company, on our solution base, how we drive that. And that gets into the flash reports. It's getting into managing this big data to basically push that data out to mobile applications, to businesses, so they can adapt accordingly. That's from the sales cycle side for a company to its production, distribution on the supply chain management, to understand that whole gamut of what's happening. That's the agility of a company to respond. Our reporting solutions have to be able to be more agile to prepare that accordingly as part of the overall flow of data. So I really want to emphasize that, because as part of your sales cycle, you may have that discussion and they may want to ask, how can we push real-time data out more as part of the overall analysis? And that's why I wanted to bring that up. Now, how does Cognos and IBM Cognos come into play? We're champions in the Office of the Finance Solution. We have tools like Cognos Disclosure Management, we have Cognos Controller, we have TM1, we have Open Pages, and we have Algorithmics. Now let's talk about Cognos Disclosure Management. It's a perfect tool because it fits exactly into that Excel environment where people are trying to work with Excel but pulling in one version of the truth in terms of the reporting tool. We also have the ability to have interoperability with TM1, and that's one of the tools that we want to drive different data points coming in as part of managing this push out of data. We could end up building more sales tracking reports, more health and safety stuff to track things, to kind of push things out to the end users as part of the overall managing of the processes. We have Cognos Controller when we want to consolidate the results of all our entities across the world through currency, eliminate intercompany. We have that tool as well. Again, it can communicate properly with Cognos Disclosure Management through different options. Through the Excel add-in link, we can talk about that in further discussions. But it allows you to kind of position yourself as an overall reporting solution as you're talking to your customer. I pulled in Open Pages and Algorithmics because they're feeding in specific niche markets. Risk management is becoming very critical, driving reports. So you're going to be seeing more and more integration of risk management reports as part of the annual and even as a soft close reporting, because they want to mitigate that risk, because if that risk drives something, it's going to drive performance. And if performance is negative, it will drive shareholder value potentially. So we need to understand how we can pull Open Pages data and look at how we can integrate that, their operational risk models or internal audit models, IT governance models, as part of the overall solution in terms of the reporting cycle. Algorithmics is very solid in the financial service area, which is really going under different things from our core rep, FinRep area, as well as looking at the Basel reporting. Any sort of mandate that they're looking at, we need to be cognizant of that and adapt. So the reason why I did this presentation was to highlight the reporting side, but understand how we can add value proposition, how we can talk the words when we start talking about integrated reporting, talk about sustainability reporting, talk about soft close reporting, to come up to more solutions to how we build things out as we position the Office of the Finance for their future needs, and especially reducing their pain points. Thank you.